All right. Appreciate you joining us. Hi, it's Bruce Clark, Coldwell Banker. So if it's your first time to the channel, do us a favor, hit the subscribe button, click the bell for notification. We'd love to notify you the next time we have a new video. And we try to do live videos once a week, but we have videos on lots of things, lots of places. So to be sure, again, to be sure first time to the channel, let us know. My name is Bruce Clark, real estate agent with Coldwell Banker, and been doing this more than 17 years. And we help people buy, sell, relocate, both to and from Orange County. And we also work with income investors. We do some commercial real estate. I want to talk about a little bit of everything tonight. So these is interesting times. Had a great conversation today with one of my clients, and we really talked about the macro, and we talked about the micro. And so the macro is really what's happening throughout the United States, what's happening throughout the world. And we talked about just all kinds of things, and we're going to be touching on a lot of these things this evening. And the micro is what's happening in Orange County, what's happening here, what's happening in Irvine, what's happening in Orange, Newport Beach, Riverside. I consider that pretty much the micro. So, but first thing is residential. Nothing has changed. This is still, it's low inventory, and that's what's driving this market. It's not lack of sales, it's lack of inventory. So we were out in Riverside, but not in Riverside the past couple of weeks. We have someone we're helping buy out there, and one of the open houses we went to, they probably had 75 people. They had people stacked outside, they had people in the home, they had people in the backyard. The agent received dozens and dozens of offers. Nice lot. It's 12,000 square foot lot. But we've seen that with other homes. There was a home where our clients put an offer in, and they had 20 offers. 17 were over the asking price. So it's crazy right now. Here in Irvine, we're seeing the same thing. We're seeing the home that we sold in Heritage Park at 8 Boston. We had 175 people through the open house. That's a lot of people through an open house. Got rid of all my flyers, and we had financing flyers. We got water, and we always like giving pastries and things. But my point is that the market is sizzling right now. And we talked about timing. I think timing any market is difficult. Timing when to buy or sell a car, timing the jewelry market, timing the watch market, timing the stock market, timing the bond market. If you like it, you buy it for the most part. You want to depend on professionals. But again, having been a stockbroker, I had access to all the charts, graphs, all the programs. Making market, I knew who was on the box. I knew who was buying, who was selling. We knew the volume, and still we got things wrong. Less things wrong, but you use a trade station. You had a Bloomberg machine. You use back then a trade station. We're writing some programs. So I've been a geek for a long time. I was also CTO of an internet retailer, and ended up selling that, and brokerage you end up selling, and so. My training in the Marine Corps was nuclear, biological, chemical weapons. So didn't translate to real estate or finance, but also was a water safety survival instructor. So I taught Marine and naval personnel how to survive in inclement weather, which is interesting because I went to school for swimming. It's very, very, very difficult school, and my daughter wouldn't listen to me when it came to swimming anyway. But let's talk about, let's go back to real estate. So the market, especially for homes that are priced well, they're selling quickly, multiple offers. We're seeing the buyers have adjusted to the interest rates. Who hasn't adjusted to the interest rates is the commercial market. The residential market overall is probably going to do okay. We're seeing fallout. We're seeing fallout in some areas. Certainly you talk about Cleveland, you're talking about Phoenix, you're talking about Las Vegas, those areas. Riverside in 2008, 2006, 7, 8, 9 took a hit. But if you had bought then, you were fine if you held through the cycle. So the reason I'm mentioning this is Riverside is not at this point being affected by the interest rates. They're being affected by the lack of inventory. Lack of inventory is driving prices up. There's new home builders out there. So in Orange County, this is what we're seeing. So the litany was if you couldn't afford Orange County, you went out to Corona, Riverside County. It's really the next city. City first after leaving Orange County is you get Riverside County. There's a street, the Green River, an area called Green River. So you went to Corona. Corona now, you've got homes 8, 9. I mean, the average price is much higher. So then what happened is people went to Norco, Chino Hills. Now they're in Riverside City, and they're going to San Bernardino. We know because we're working with buyers like that. We work with buyers at all price ranges. Today I was discussing a $19 million home with one of my clients. And so at the same time, we're out looking at $400,000 homes. I think that's what real estate agents do. I don't consider myself just a luxury agent or an income specialist. I'm a real estate agent. And so I think this gives me a really good perspective on all the markets. I work with buyers, work with sellers. We work with people that are doing 1031 exchanges, which is a tax deferred exchange. 1031 is the section in the IRS, and that's the code that it references the section. So that's what we're seeing in the residential. And again, I touched on commercial. Let me get back to that, because what we're seeing is a lot of really big distress properties, a lot of big portfolios defaulting. We've got Brookfield, we have BlackRock, Blackstone, you have back east, Boston Properties. You've got some big boys that are having problems. It's big girls. I'm gonna be gender neutral. Anyway, we see some big dogs, so to speak, that are having a lot of financial problems. The reason they're having financial problems is because that's what with live chat. My assistant's not here tonight. My beautiful wife. So you typically in a commercial, you can have 3, 5, 7 years. You're going to have adjustments, and so when the Fed start raising rates, you almost can't get out of the way. Certainly, if you hadn't planned on it, and we've seen this play out with real estate investment trusts that are getting hit hard. We know some that can't go public, and they had planned an IPO. So how is this going to affect you? How is the residential market, the commercial market, stock market? We see what's happening. I'm going to wrap all this in a nice little bow here in a minute. Stock market, banks getting hit. First Republic hit again. Credit Suisse, even though it was absorbed, getting hit hard. We just saw GameStop. Not GameStop. I'm sorry, not GameStop. GameStop is a meme stock. We saw Bed Bath Beyond. They're gone. As we drive around Orange County, and as we've driven around Riverside County and San Diego County and all these places, we're seeing lots of small businesses that have gone under. We see restaurants, another corner bakery that just disappeared. And these are not necessarily small businesses, but they're small in the sense that they're in some smaller malls. But as you go into the Bed Bath & Beyond, now you're talking multi-billion-dollar company, lots of locations, lots of people. So those people are going to be out in the street, so to speak, looking for a job. It's going to be interesting to see how that if it helps or hurts the retail industry. It's been, they've been paying more and more as far as labor costs. So in the on the stock market side, Apple got hit Facebook's done great. People, are advertising more. When you talk about the bond market, because of rising rates, that's really dramatically affected the bond market. And so bond markets are, if you're not familiar, bond markets, basically it's a loan. You're loaning money to a company. You have preferred stock and you have common stock and all kinds of treasury stock and all kinds of fun things. If you ever have questions, Investopedia, and there's some great sites, stock charts, and all kinds of places that give you a lot of really great information about what all the terms mean and things you're doing. But I believe they all intertwine. I mean, they're all intertwined. They all work together. Inflation, it's now 5.6%. I personally, I can't see how. Gas is out here in California, you're talking, $5, $5.50 a gallon. Go to the store and buy what you did last year and see how much more expensive it is. Look at the cost of eggs, the cost of meat. It's crazy. So what I'm saying is that we need to look at the macro. Now the micro is that real estate's local, and it is. And real estate's about location, location, location. So good homes priced well are still selling. In a market such as this, it doesn't even have to be a good home to sell. We're still seeing lots of homes that are selling as is, where is, things like that. Those are terms we used to use in the commercial market. You didn't really use it in residential, as is, where is. But we're seeing more and more of that. So the commercial will affect the residential because the people that invest in commercial real estate also own residential real estate. So there'll be communities that will get hit harder than others because of the fallout from the commercial. Colliers just talked about this, and others, many others. And the belief is that it's going to be really bad for the commercial market because of the rates and because of things like that. People are not going back in the office. Class A office space, the big buildings, decimated. Brookfield, I think $600 million was one of their defaults, and that was the Figueroa building downtown LA. What we're seeing is a repurposing, and what they're trying to do is they're trying to convert the big office buildings to condos. Incredibly expensive, and by the time you plan this, it's going to cost more than you think, and certainly it's going to take longer than one thinks. But the carrying costs and all of this, I don't see them being able to do that in big buildings. It's going to be interesting, but we are going to see more and more of that. How will that affect the residential? The failing of that building, people are going to have to find somewhere else to lease, somewhere else to have office space. But on the residential side, if they can convert that to, let's say, 1,200 condos, then that's 1,200 additional units. That helps with inventory. That helps bring the prices down. So you really have, you have a positive and negative. A little all over the place when I'm tying this together. Recently, we just saw in South Africa, there's a company called Eskom, ESKOM. I'm very familiar with them because many, many years ago, Eskom bonds were some of the best bonds. Rand denominated, they were yielding like 19%. Eskom is their publicly owned utility company, power company. And South Africa is experiencing blackouts, a lot of rolling blackouts. They're doing that because they shut the coal plants down too early, and natural gas plants, more natural gas than coal, I believe. They believe they could go green. We're seeing a big push here for green. And the question is it going to be too fast? Are we going to have blackouts? If we have, and this is not political, this is an observation from what's happening throughout the world. If we have it here in California, for example, we just saw somewhere else they don't want liquid natural gas shipped. But if they don't allow more natural gas, then that's going to affect the residential, but also commercial, because you have a lot of restaurants, a lot of businesses depend on natural gas. So as we have blackouts here in the United States, based on what we're seeing throughout the world, it looks like if they're moving too quickly away from quote unquote fossil fuels, then, and you can't replace that kilowatt for kilowatt, then by default, you're going to have less availability, and by default, we probably will have blackouts. If we start having blackouts, and really all bets are off because productivity goes down dramatically if you can't go to work. And we've seen this. If you can't go to work, then the productivity drops. And of course, then, the shipping, all kinds of things. So, it's going to be, that to me is probably the most serious thing that we're going to face, because that will definitely affect all of us. We have problems in commercial space. We have inventory issues in residential. Interest rates, I was surprised they were talking about another increase in the Fed funds rate. That only adds to the problems in the commercial office space. Does nothing positive for commercial real estate. Nothing. There's nothing good that comes from another rate increase. Let me say it again. There's nothing good that comes. The residential, not a big deal. An extra 15, 20 bucks for most people, or an extra 50. Thank you, God. For most people, it's not a big deal. On the commercial, it's a difference between surviving. It could be an extra $25 million of debt service or more. So we're seeing that. Not affecting residential as much, definitely affecting the commercial space. On an income side, here in California, we've got some 5.5% cap properties. Above that, you're talking about probably some value add, lots of different ways to do that. We're aware of some excellent self-storage opportunities locally, North Hollywood, something like Elsinore, some other places. There's some things in Phoenix, some things we're aware of, and that people we work with have gone through and looked at numbers. But let me kind of wrap this up, and I really appreciate you joining us. 2023 can either end. I don't think it's going to go out with a winner. I think it's either going to go out with a bust or with a boom. It's going to be driven by, in the residential, by inventory. People just aren't moving. The golden handcuffs, they're in the low rate. They're just not putting the homes in the market. So on the commercial side, if the Fed continues raising rates, we're going to see defaults like we've never seen before. And this is not just me talking. This is a lot of analysts, and it's concerning because we're talking about big investors, and then who's going to absorb the inventory. We're seeing on the income side, I think more people are investing in the income real estate because they're concerned about the stock market, concerned about the bond market. On different classes, the office space out of favor, self-storage, a lot of big money came in. There's some niches though. Call, email, text. Let's set up a Zoom call. We have some interesting opportunities, but we're seeing it's going to be a boom and bust. I just don't think we're going to do this. I think it's either going to be here or here. I think the residential is going to be more here in many areas. I think the commercial is going to drop off. And so if you're looking for a good return, of course, you've got treasuries, but there's a lot of other opportunities. So, and it was kind of all over the map with a lot of things, but I hope I distilled it down. And certainly if you have any questions, gosh, we'd love to talk to you. We get calls, emails, text messages every day from people. So whether you're looking to make a move next 5 days, 50 days, or further out, give me a call, shoot me a text, send me an email, set up a Zoom call. We'd love to help you with your residential real estate, whether you're moving, whether you're moving to or from the area, commercial real estate. and also income investing. Bruce Clark, Coldwell banker. Really appreciate you joining us, and let us know if you have any questions. Thank you.